Every investor is interested in learning where to find good investments. So, how exactly do you do that? Today, we'll provide you some tips on how to recognize a solid investment. But before that, make sure to like and subscribe to the Inlet Financial Coaching channel. Now let's get started. Number 1. Consider getting a chart analysis. You must examine the chart data if you plan to trade currencies, buy stocks, or invest in any other asset. All industries display price changes over time, and by examining them, you may comprehend and monitor the asset throughout time. Having the ability to properly study the charts and utilize the analysis report to spot opportunities is necessary for finding a good investment. Plus, you'll be able to identify the investments to avoid. Indicators like the average price movement and countless more are used by many investors nowadays. Although it might seem difficult, there are a ton of apps that greatly simplify it. You may also learn when to buy and sell by using a chart analysis. Always buy when prices are down and sell when they are rising is the fundamental rule. Number 2, learn how a company generates revenue. It's commonly believed that successful businesses have simple business models. A business's revenue generation process shouldn't be confusing. 1 + 1 should equal 2, thus it should be that simple. If a company's operations and sources of revenue are difficult for you to comprehend, move on and explore for alternative businesses. Additionally, you ought to be able to name the main costs that an organization incurs. Understanding a company's business strategy is important since it will enable you to decide when to buy or sell its shares. Number 3, think about new markets. On the U.S. stock exchange, everyone sticks to the same trend and similar investment strategies. Although there's nothing wrong with this, the possibilities may be limited. Alternatively, you can broaden your perspective to include various perspectives, and you can find tremendous opportunities as a result. The opportunities you'll discover will shock you. Number 4, pay attention to the latest news. Make it a habit to check the news occasionally, whether it's the first thing you do every morning or you prefer to get automated phone notifications from news applications. Watching the news is the best method to learn which businesses are the best to invest in. This will help you remain on top of financial news. Make this a routine if you don't want to rashly follow a trend without adequate knowledge. You'll be able to uncover new opportunities and arrive at wiser judgments by doing this. It has never been simpler to do so in the modern world we live in with social media and countless news websites or apps. Number 5, seek advice. Although it may cost you some money, this is one of the most secure ways to invest. As you look for investments worth your money, it could be challenging to figure out where to start if you're a beginner. Many people lack the time to conduct the necessary research or implement any of the advice provided here. You can hire a professional to give you advice. Take advice from those who have a track record of making wise investing decisions if you choose to go this route. Don't be shy to request phone numbers. Ask them openly about their prior accomplishments and the amount of money they have made for their clients by handling their portfolios. Ask for some proof to verify that they're not bluffing. They might not be able to show you everything, but the least they can do is provide you some convincing proof of their skills. Additionally, avoid reading blogs and forums on the internet. Choose a knowledgeable specialist, and depending on how they do business, schedule a meeting with them. Number 6, long-lasting competitive advantage. The key is to select businesses that have a significant competitive edge, because doing so will increase the security of your investment by reducing the likelihood that the business would face intense competition and ultimately suffer losses. Find out what sector the business operates in, and then look at the goods or services it produces. Then consider the consumers of the goods or services. Are they devoted to that certain brand? Is this a sector with specific consumers? If so, where does the business stand within the industry? Is there a significant competitive advantage? Do consumers like this company's service or product over others? Do they have unique production techniques? Number 7, the business can get through difficult times. The business can endure difficult economic times. Economic changes are unavoidable, and they often come without warning. Take a look at the pandemic, the coronavirus, and how severely it has affected everyone in the world, posing a risk of a global economic downturn. Such hazards might be impossible to prevent because company officials have no influence over them. However, you can go into the past to discover how these businesses have responded to similar circumstances. Consider the time it took and the precautions the business made, and decide if it has the strength to withstand the inevitable, difficult periods. While some businesses have yet to fully recover from the crisis, others did so in record time. Number 8, examine the dividend rate policy. A dividend policy is present in every firm that has gone public. Find out their dividend rate and the terms of payment, such as whether they are made annually or quarterly, by reading the fine print that should be available on the company's official website. This will show you the potential amount of dividend income you could receive at the conclusion of each period. In spite of the fact that monthly dividend payouts are quite uncommon, PIC firms with higher dividend rates are more regular quarterly or monthly payout terms. So what's the big deal about this? You can make money by purchasing shares in 2 different ways, either through capital gains when you sell them at a higher price after the share price has increased, or via dividends. You'll be smiling all the way to the bank with a desirable dividend policy. Additionally, successful businesses have a track record of satisfying their stockholders. They have a history of raising the dividend rate every year, rewarding them with greater profits per year. To put it in another way, you want to invest your money where the executives have your best interests in mind. Good businesses have a track record of giving back excess cash through well-executed share repurchase plans or dividend growth that is comfortably higher than the general rate of inflation in the economy. You want them to create an atmosphere where success is determined by how the business performs for you, the owner, along with other stakeholders like employees. Number 9, shares have a reasonable price. Price plays a crucial role in determining whether you'll benefit or lose from your investment, particularly if you want to hold on to it for a long time. Even the best companies in the world can turn out to be terrible investments if the price isn't right. The majority of investors search for undervalued assets, acquire them in large quantities, and then sell them when the true or actual price starts to rise, making a sizable profit. You run the risk of losing a lot of money if you purchase an overpriced share that may have been valued that way owing to market forces or speculative activity. This is when revaluation takes place and the real value replaces the overpriced one. Finding a company whose share price is reasonable or undervalued will be great. Number 10, the business enjoys high capital returns. You need to run the numbers once more. The returns on capital a company earns indicate its capacity to produce returns over a longer time horizon. High returns and low debt rates are characteristics of the finest businesses. In other words, businesses that can generate cash from their available capital and resources without taking on a lot of debt. Your success is greatly influenced by the investments you make, and the trick is selecting the appropriate investment for you. That concludes today's video, which we hope you enjoyed and learned something from. If you liked this video, don't forget to give it a thumbs up and subscribe to the Inlet Financial Coaching channel if you haven't already. Thanks for watching, and we'll see you in the next video.